questions have arrived meanwhile, and very few of them relate to the past or our actual results. Actually, the only one that is truly referring to that is a question about the RWA increase in the quarter, and two analysts are asking for the explanation of this.
So in the third quarter, apart from loan growth, we had a number of methodological adjustments and way of calculation that had impact in terms of the variation of the risk-weighted assets. However, this does not compromise our effort of optimization of RWAs, and we expect it to be visible in the nearest quarters. So we had here some one-off impacts in terms of the way of calculation, the risk-weighted assets, but this does not destroy our objective of improving RWAs, and this effort is especially being focused in the corporate segment.
Thank you. The remaining questions concern effectively 5 areas. One is outlook. It's the usual set of questions about NIM, fees, and lending. Then there's a handful of questions about credit holidays, recovery plan, and FX. Any wishes or desires in terms of the... No, okay. So let's do the NIM questions first. A couple of analysts or participants were asking for our outlook for NIM, and in this context for depot costs in light of the recent developments. One asked a very specific question: when do we expect a monthly NIM to peak? Which I think we may not necessarily be willing to answer. And there was also a question about fees, what we think will happen to fees, in particular lending fees.
So maybe I will start, especially on deposits. So we talked several times about this in these quarterly results, that in the first phase of the hike of the interest rates, it's possible to not go immediately reprice to deposits. So there is an automatic mechanism that reprices the loans. And then the deposits, they go a little bit later, as it is exactly the same in when there is rate cuts, that the credit are immediately adjusted and the deposits are taking some time. But this is also a question of consumer behavior. So up to 3.5%, 4%. There is a level of indifference in terms of the consumer for time deposits, but when you are at 6, 7, 8%, then of course there is an activity from the clients to shop around for deposits and to look for better solutions. So we believe that the biggest impact in terms of in terms of hiking interest rates of the deposits were in July. Now we are more in a stable environment, so the offers of the banking system already is quite aggressive, and we will stay at these levels. It's obvious that even if we stay at these levels in terms of pricing, offer to the clients, we will have some increase in terms of cost of deposits. So first of all, there is the maturity of all deposits and then the new deposits, but also there is a shift in terms of the allocation or the composition or the mix of deposits. So we during the COVID times and after, with interest rates at zero, there was a huge increase of current accounts and a big decrease of time deposits. And as we are going, as time goes by on a high interest rates environment, there will be a reverse of this trend, and we will go to a more normal balance between current accounts, savings accounts, and then time deposits. So we understand that how to manage the time deposit, deposits pricing is crucial for the profitability of the bank. So we will manage it as prudent as possible. But it's obvious that there is a trend of growing the cost of deposits, but we believe that will be a very slow trend. It's important also to understand that from another side in credits, especially adjusting the risk to a more recessive environment, also and cutting out the lower ratings, also in terms of the credits, there will be a trend of reducing the margin. So it's smaller, this trend is obvious, but in order to accommodate higher interest costs for lending for customers, there is always a tendency also to have a slightly decrease, especially in consumer lending.
So just regarding the NIM, so of course we still are going through a very volatile environment in terms of interest rates and in terms of market expectations regarding interest rates. Just a few weeks ago, when we were expecting interest rates to remain stable and then even to drop in the end of next year, we were assuming that we were reaching the peak levels of the NIM. Now we have a different picture. So we cannot say that we already reached the peak, but also, as it was already explained, we also have some ongoing repricing of the deposits, but we cannot expect significant increases of the NIM in the near future with the current environment. Regarding fees. So there is a specific question about after this adjustment of the loan fees that I mentioned with this provision for return of insurance fees. There is a question about what would be the ongoing loan fees for the next quarters. So as I said, the impact was 18 million. So that's why we are showing loan fees of 32 million in the quarter. So without this would have been 50. So we would say that we would be somewhere between 45 to 50 million per quarter, taking already into consideration this impact.
Loan outlook, if you want to comment at all.
Loan outlook.
So in terms of loan outlook, we are positively surprised in terms of consumer loans. So more or less 1 year ago, we started to have some changes in terms of risk criteria, some prudence in terms of the measures and the filters and also how to calculate the credit capacity of the customers. So in a positive way, we see good production of consumer loans. Of course, even with a more prudent approach, there will be an increase of cost of risk in the future with a more aggressive or a more with high inflation and a little less optimistic outlook. But we were quite positive in terms of this production. Mortgage, we are foreseeing some improvement, but it will take a while to go back to the levels of 1 year ago. There is some seasonality also, and usually mortgage production, they start to be more positive in the beginning of the year, so there is obvious some seasonality, but of course the levels are very depressed due to high interest rates and also probably some prudence in terms of the clients related to the real estate prices. we are seeing a very strong dynamic in terms of corporate lending. We unfortunately are not taking this opportunity because of this prudent management of RWAs. This is more short-term lines, it's overdrafts, factoring, working capital. This also shows some more difficulty in terms of companies of managing their cash flow. We are quite confident about the risk levels that we have in our corporate portfolio, but it's important also for the sector to assess well how the companies are going to be refinanced in Poland. But in general terms, for us that we are mainly focused in retail, we see consumer lending as still positive and some rebound in terms of mortgage, but with difficulties to go to the levels of last year.
Thank you. There's a handful of questions relating to credit holidays. If we could confirm whether this is 60% of value or number, if we could comment on the tax treatment of credit holidays, and there was a question about methodology, but I think this is pretty straightforward.
Yes, so I think we were very clear in our report, but I will repeat. So we considered for the provision 80% of eligible amount, not number of borrowers, but eligible amount, which is what matters for the calculation of the provision. In terms of tax treatment, of course, we consider this as, as tax deductible, but however, this does not mean, there's another part which is that as this goes to DTA, and this DTA exceeds 10% of our equity, so of course there is also a large part of this tax effect which is lost when we make the calculation of the capital. So in terms of capital, the impact was close to the gross impact of the provision and not to the net impact of the provision. Regarding...
No, just a clarification, because to be more precise, because if it would be in terms of numbers of customers, the number would be much lower. Because as can be expected, is the customers with higher installments that are requiring the credit holidays. And also there is a question if it is, so as Fernando said very clearly, so the average of the 2 months is August and September is 66, but he also informed that the September is 69. So this is in all the installments that could ask for a holidays, a credit holidays, 69% did this.
In September. In
September, exactly. And we believe that at the end of the year, so we would have already 2 quarters, we would be ready to assess not only how it was, because this is quite easy, but also how it would be the rest of the next year.
Okay, our chairman has just given the number of the average for September, so it's easy to calculate August, and that was one of the questions which we don't need to answer anymore. There was also a handful of questions about the recovery plan, whether we could add more color on the initiatives that we taking, and about the timing. And also there was a handful of questions about the developments of our capital ratios. If we could share any thoughts or our plans with that regards.
So what we can say, we have a plan which, if executed, could put us in the third quarter of 2023 already above the minimum capital requirements. It's a combination of, as I mentioned, operational results, meaning which means in practice that what we are projecting is positive net result each quarter, because we are not assuming other events such as IPS in the second quarter and credit holidays in the third quarter. So our projection, without events like these, show the possibility to generate positive net result, which means that we start to organically generate capital, or even considering the further provisions for FX mortgage loans. So this is one important aspect. The second one is all the work connected with optimization of capital, through optimization of risk-weighted assets, and especially through asset securitizations that we are going to do between this year and the first half of the next year. So there's a combination of actions. I will not enter into the details of each one because some of them are under preparation, but our projections show that it is possible to reach these levels above the minimum required around the third quarter of the next year. Of course, because there's one question connected with this, of course, the limitation that we are putting in terms of business development is connected with the growth of corporate loans, especially large corporate loans. This is the main restriction that we are applying in terms of business. We are trying to avoid to have any other impacts in terms of our business activity. What else?
The FX mortgages, the elephant question being
FX
potential implications of the ECG ruling, whether we are analyzing the income, whether this would have impact, and also there was a very specific question whether we are assuming remuneration for capital in our provisioning methodology.
So I will start. So first there is a question about tax deductibility of the provisions, and what I can say is that for now we are not considering the tax deductibility of the provisions that we are creating, although we are fighting for that. So, but in a conservative way, we are not reflecting it in the methodology, although we think that there are grounds to make it happen. But again, this will be a long process and a long fight. The second is about, there's also a question about further provisioning in future quarters. I just would like to remind what are the crucial factors that drive the level of the provisions. One is the inflow of new court cases. So this is let's say, the major driver. And the second one is also the probability that we are assigning to win or to lose. Of course, this probability now has been getting worse and worse due to the fact that Polish courts are ruling in a very high proportion against the banks. And so, as a consequence, the probability of losing now is already at a high level. So it means that through time, it will have less impact in terms of the provisioning level. So these are the two major drivers. Additionally, we are assuming, and we also wrote this in our financial report. We have a component of remuneration of capital, but which is low for the time being. So we assume a probability of remuneration for capital in our provision calculation, but we are conservatively, for the time being, assuming low probability, although trying to demonstrate the fairness of such approach in the legal proceedings, and especially in the European Court of Justice. And so the answer is I think I answered all these questions. I think that, because there's another question which I think final, which is what will be the impact if we would lose the case that is in the European Court of Justice. So we are still not, we still have some time until the final decision. Last week we had the hearing in the European Court of Justice. There will be opinion of the General Advocate of the European Court of Justice on the 16th of February. And then we will still need to wait several months, probably between 4 and 6, for the decision of the European Court of Justice regarding that topic. So we are not expecting the clarification of that point until that time, and even we don't know if it will be clarified at all during those court proceedings. So, but this translates for us in the continuation of the strategy that we have been doing, which is to continue to develop the effort to negotiate with the customers.
So maybe, maybe just an additional comment. So from one side, with the simplicity of the methodology that we have, you can see basically a quite stable level of provisions. Sometimes can go up and sometimes can go down, but in a very smooth way and very much based in exactly what Fernando said. It's at the moment is more the number of cases, even because as more decisions are being taken, the probability of losing is starting to be achieving the maximum. So it's starting to be stable. We were very proud that we were able to achieve again a big number of settlements. This is important because it's obvious that from one side, as the viable rate is higher, it's more difficult to attract customers to make a conversion. As the zloty is weaker, it's more expensive for the customer and also for the bank. So this process is becoming, of course, as time goes by, the process is more difficult, and also the number of customers that have active loans in Swiss francs is also the customers that have been already approached more than once, and they are less open to make a settlement. We always try to explain that we don't have a unique formula to everybody, that we are approaching each customer to see his own solution. Sometimes the solution is specific because he wants to early repay and close the issue. Sometimes he wants to sell the asset, the house. Other different situations happen. What we start to be also happy is the numbers of settlements that we are achieving with the court cases already. Of course, these numbers are much smaller than and not so visible yet as the numbers that we have of customers that are not in court with us. The process is extremely complex because it involves lawyers, and some of the lawyers have success fees, some of the lawyers have mass customers, so it's not, and even the lawyers of the bank, they are more trained to fight than to reach a settlement. So it's a process that we have been doing, but we are happy. We were already able to make inclusively a group settlement, so a law firm that made a settlement for a group of customers, that this could be also a good solution. So we don't think that one day we will come here in the results presentations and we will say that the problem is solved. This will not happen. But as time goes by, from one side we increase the provisions in the steady way. From another side, we making settlements, we decrease the number of loans. We are already below the 40,000, so it's. I think that although we very costly and hard work, we are going in the right direction in terms of solving this problem. There is a question in terms of assessing what would be the impact of the negative decision of European Court. In our view, at least when we look to this issue from Poland, a big part of the negative impact is already incorporated. So if you understand the discussions of the lawyers and the expectations of the customers and even the discussion on the press, the scenario of non-remuneration is somehow embedded in all the situation. It's very difficult to predict, but I would say that there is an unbalanced situation. So if the decision would be positive, it will be extremely positive for the banking sector. If the decision is negative, it will be negative for the banking sector, but not in the same way.
There is also a question about MREL. So what we can say about MREL, as we also were very clear in our quarterly financial report, that for the time being we are below the minimum interim level. And for us, we have first the priority to reestablish the capital ratios at the minimum required levels as soon as it is possible. And after that, on the top of that, to do the necessary step through issuance of bonds or whatever that will allow us also to comply with the level of MREL. Obviously, the net result of the bank also affects the gap of MREL. So when we have a loss, like we had in the third quarter, it increases the gap of MREL by the amount of that loss. So, but again, our plan is very simple. We have a plan of restoring capital ratios above the minimum required levels in a comfortable way, and then to do the necessary additional actions in order to comply with MREL. Of course, ideally, this should happen until the end of next year, but also we will need to take into consideration the market conditions and everything that will happen until that time.
I believe we have largely answered the questions. I mean, some are very, very particular. I mean, relating to tiny P&L items or balance sheets. I will probably take them offline.
There's just one more that I would like to answer. This is also a question about how much, from which moment we could. I mean, what would be the moment from which we could start talks with regulators about waiving the recovery plan? So I think what we understand is that we need to bring back the capital ratios in a comfortable way to the minimum required levels. So we are not able to say how much time it takes to exit the recovery plan procedures. So for the time being, we need to leave it open.
And it's ultimately not the question to us.
Mm-hmm. Yes. Let me just check once more.
Final rundown on the questions.
A question about P2R, because there was a question about P2R. In the presentation, it is clear what is the level of P2R that is being considered as part of the minimum capital requirements. This is clearly shown on page 13, where we have the what we call FX buffer. It's in fact this P2R. So we are not making any comments about evolution of P2R because, as you know, every year we have an update which is done by our regulator, by KNF, and so usually it happens in the fourth quarter. So when there will be any news about the updated Pillar 2 buffer, we will inform the market, but for the time being, we are making our projections assuming no change in the P2R.
All right, gentlemen, thank you very much. Any closing remarks from your end? No?
Sorry. No, just so starting from the beginning, credit holidays were the only reason for us to launch the recovery plan. The impact is done. We were conservative in terms of what we announced first, then what we book. We will make the necessary adjustments at the year end. Swiss franc, the legal environment is aggressive. It's no way to change it and to say it differently. We believe that somehow this is heavily discounted here already in Poland. We have our plans, so a very strong legal defense, regular provisioning for the legal risks, and to settle as much as we can. And we need to remember also that it's very easy to have a mathematical mind, but as a consumer, a settlement today in a country with 17% of inflation can be better than a court decision in 10 years. And so it's normal that even customers that refuse a settlement 6 months ago, now they can be open. We do this in a regular way. We have a special team for that. We track everything that we talk, that we offer, that we discuss, and this takes time, but it's very profitable for us. Recovery plan, capital, MREL, Fernando already said everything. It's our core and biggest priority. We are executing our plan. Inside of that plan is, of course, the capacity to generate results from the natural business. We are already at the level that we were planning in the past to be. That is when we have the capacity to deliver results that cover the provisions and the settlement costs and the legal costs of Swiss francs. So we are at this level. So it's our belief that what we presented today was our last loss, and from now on we will be in a capital building situation in organic way, very, very smooth. We internally also we are quite enthusiastic with some numbers. So I know that with the analysts are less popular these kind of numbers, but we are very close to achieve 3 million customers. This was a target that we were having for 2024. It's quite important because it's only with the very strong customer acquisition that we can make normal business without overpaying deposits, without compromises of risk in consumer loans and all of that. So we are quite, and also in terms of digitalization, the process is going quite well. This can allow us also to go to next movement in terms of efficiency, because only when you have a digitalized portfolio, then we can go by reducing the footprint, by don't needing so many people to make the same business, etc., etc. So we think that although not a mega enthusiastic quarter, it was a very solid quarter and with strong results and also with some milestones in terms of our strategy. So it's very important to be able to make at the same time the recovery plan, but also not jeopardize the future of the bank. And so customer acquisition, digitalization, solid business is core for us.
Gentlemen, thank you very much for your time, for your answers to questions. To the viewers, obviously, thank you very much for your interest, time as well, and all your questions. As usual, we remain open to any further issues or any further questions that you may have. Otherwise, thank you very much and see you in approximately 3 months. Thank you.